Welcome to the next episode of Small Business Legal Tips. I'm attorney Mark Bross of Bross LLC. I'm a practicing Massachusetts business attorney with over 15 years of experience of helping business owners in Massachusetts. Today, we're going to talk about a situation that happens all the time. Imagine that you're a business owner who operated their business as a limited liability company, which is also called an LLC. You operated the business for years through the default taxation status for the LLC, which is either as a partnership or as a sole proprietorship, depending on the number of members that you have. However, at some point, the business owners decide that they want to change the default taxation status of the LLC and become taxed as an S Corporation. Usually, it's done to save on self-employment taxes by paying the owner a reasonable salary and only paying self-employment tax on the reasonable salary that's paid to the owners of the business. However, the problem for most LLCs is that they have operating agreements with provisions that are incompatible with being taxed as an S Corporation. This means that if the IRS ever audits your business and looks at your operating agreement, the IRS can decide that your LLC doesn't actually qualify as an S Corporation. And if that happens, the IRS can terminate your S Corporation status and you could be stuck owing back taxes and penalties. Nobody wants that to happen. In this video, I'll walk you through why qualifying for S Corporation status is so difficult and why many LLC operating agreements fail to meet the test. I'll also walk you through some clauses to include in your LLC operating agreement to maximize the likelihood that the IRS will honor your decision to be taxed as an S Corporation. And please, if you'd like to receive more helpful legal tips like this one, please hit the like and subscribe button below. It really helps the channel and lets me know you'd like to receive more helpful legal tips like this one. So let's get to it. The first thing you need to understand is what an S Corporation is and what does your LLC need to do to qualify as an S Corporation. Now, despite the name of being an S Corporation, that doesn't mean that your LLC actually becomes a corporation. As an entity, a corporation has certain rules that need to be followed, including having officers, directors, corporate bylaws, and various other things like that. Your LLC does not have any of those requirements, even if it qualifies to be an S Corporation. Instead, becoming an S Corporation means you're electing to have your LLC taxed as a subchapter S Corporation, known as a small business corporation, with the Internal Revenue Service, also known as the IRS. And there are usually a lot of reasons to make the election, with the most important one being that you can save on self-employment taxes for the business owners working in the business, so long as you pay the owners a reasonable salary as determined by the IRS. To make the election with the IRS, you need to file IRS Form 2553, which I'll put a link to below. After the form is filed and accepted by the IRS, your LLC will be treated as an S Corporation for tax purposes, both with the IRS and with the Massachusetts Department of Revenue, which is also known as the DOR. However, even though the form is accepted by the IRS and your LLC is treated as an S Corporation with the IRS and the DOR, it doesn't mean that your LLC actually qualifies to be an S Corporation. As I discussed in an earlier video, in order to qualify as an S Corporation with the IRS, your LLC must meet certain requirements which are pretty stringent. I'll put a link to the video below. And even though your LLC is still an LLC and doesn't have to meet the other corporation requirements, it does have to meet the IRS S Corporation requirements, even though it's an LLC. And here are the two most stringent requirements. First, there are strict ownership requirements in order to qualify as an S Corporation. Generally speaking, to qualify as an S Corporation, the owners of your LLC, typically called its members, must all be individuals who are U.S. citizens. Generally speaking, corporations, partnerships, other LLCs, and most trusts can't be owners of your LLC. Also, you can't have more than 100 owners or members of your LLC, although that's typically not a problem for small LLCs. Second, your LLC can only have a single class of stock or shares. Usually LLCs don't have stocks or shares, but have what are called membership interests or units, but the same rules apply. A single class of stock or shares means that each stock must convey identical economic rights to each of its owners. So when the LLC pays distributions to its owners, it must pay all owners at the same time and in the same amounts in proportion to the number of shares that are owned by each member. So if you have two members of your LLC and both own 50% of your LLC, a single class of shares means that when the LLC pays a shares of the profits to its owners, it must pay each owner equally in the same dollar amount and at the same time. If your LLC doesn't meet these stringent requirements or various other requirements, then it should not be taxed as an S Corporation. Now, The IRS really doesn't look at whether your LLC actually meets these requirements when your LLC files Form 2553, but relies upon the owner's representations in the form that it does. However, if you get audited by the IRS in the future, which nobody wants, they can look at whether your LLC actually qualifies as an S Corporation. And if it doesn't, they can invalidate your election and impose fines and penalties for improper classification and the taxes that are owed. Now, if you get audited by the IRS, one of the first things they're going to look at is your LLC's operating agreement. And unfortunately, the operating agreement for many LLCs in Massachusetts that converted to an S Corporation have provisions in the operating agreement that are inconsistent with S Corporation status. The problem is that most LLC operating agreements are drafted around partnership tax rules under Subchapter K of the Internal Revenue Code. And the reason for this is that the default taxation status for multi-member LLCs is as a partnership. So it makes sense to have rules consistent with partnership taxation. And even though the default taxation for a single member LLC is as a sole proprietorship, some of the partnership taxation clauses have made it into single member LLC operating agreements too. Now, unfortunately, partnership taxation is very different from S Corporation taxation and can cause all sorts of problems for an LLC that's trying to be taxed as an S Corporation. For example, a partnership-based LLC operating agreement will often contain language requiring the LLC to maintain capital accounts for all members and to make allocations and distributions on the basis of the member's capital account balance rather than the percentage of the member's ownership interest in the company. Since distributions on the basis of a member's capital account balance are not the same as distributions on the basis of the member's ownership interest in the LLC, this distribution requirement violates the S Corporation requirement of having a single class of shares. So, your LLC likely can't qualify as an S Corporation with this provision in its operating agreement. This, of course, is not the only clause in an operating agreement that can cause problems, and there are lots of others. Another example is if your LLC operating agreement allows you to transfer your LLC interest to anybody, this can be taken as a sign that your LLC should not be treated as an S Corporation. As we discussed earlier, S Corporations can only have certain types of owners, so if your operating agreement allows you to have other types of owners, this will be taken as another sign that your LLC does not meet the requirements of being an S Corporation. Now, you might be wondering whether the IRS gives you any room if the violation was completely unintentional. The short answer to this is maybe, but it will really depend on your situation and the facts and circumstances surrounding any distributions you made to the members of your LLC. Speak with a knowledgeable business attorney and your accountant if you have any concerns. However, it's far better not to have to rely on grace from the IRS, so we'll talk next about some clauses that should be included in your operating agreement to help your LLC satisfy the S Corporation requirements. There are a wide variety of clauses that should be included in a Massachusetts LLC operating agreement that wants to be taxed as an S Corporation. To simplify the discussion, I'll break it down into three categories. The first category will be S Corporation identity clauses. The second category will be single class of share clauses. And the third category will be S Corporation ownership clauses. All three categories of clauses are essential to include in the operating agreement for any Massachusetts LLC that wants to be taxed as an S Corporation, and you want to include as many of them as possible. So let's start with the first category of clauses, S Corporation identity clauses. These are specific provisions in your LLC operating agreement that make it clear to anyone reading your agreement, including your members, potential investors, and the IRS, that this LLC operates under S Corporation rules. Because this identity is so essential to your tax status, these statements need to appear in multiple places throughout the entire document. It will totally seem like overkill, but you really don't want to leave anything up to chance, and you want to make it clear that your LLC is being taxed as an S Corporation. Here are a couple key places where you want to include S Corporation identity clauses and declaration statements. The first place is right in the agreement's heading on the first page. Usually, you'll have a title to your operating agreement that says, Operating Agreement for XYZ LLC, a Massachusetts limited liability company. You still want to have a heading in your LLC taxed as an S Corporation, but you want to change it so that it reads, Operating Agreement for XYZ LLC, a Massachusetts limited liability company, subject to federal tax treatment as an S Corporation. You want to include this information right in the heading so that it's clear that what your LLC is an LLC that's taxed as an S Corporation. The second place to include S Corporation identity statements is in the recital section of your LLC operating agreement. The recital section is a section of the operating agreement right on the first page where you recite all the facts that led up to adopting and signing this operating agreement. So you want to include things like the date your LLC was formed, the date of any prior operating agreement that you had, if any, and the filing of Form 2553 to be classified as an S Corporation. By including all these things in the recital section, you'll be making it clear that your LLC is specifically choosing to be taxed as an S Corporation, and that's the reason why you're adopting this particular operating agreement. The third place to include S Corp identity statements is as part of your company purpose section. Every Massachusetts LLC operating agreement should have a section that states what the company's purpose is. Usually the clause states something like, the company's purpose is to engage in a particular type of activity, and any lawful business or other activities for which a limited liability company may be organized under the Massachusetts LLC Act, or something to that effect. That clause is fine. But for an LLC taxed as an S Corporation, you also want to add something that states that the company is not to engage in any activities that would otherwise cause the company's S Corporation election to terminate. By adding this, you are making it clear that being an S Corporation is an essential part of what your LLC is and does, and that it won't do anything to violate its election to be an S Corporation. The fourth place in your LLC operating agreement to include an S Corp identity clause is in a section that I call the S election provision section. In this section, you want to state that the company and its owners will take all necessary steps to elect and preserve S Corporation status. This clause will require the members to sign certain documents, such as Form 2553, and also to take whatever steps are necessary to restore the company's S Corporation status in case there's an inadvertent termination, which can happen from time to time. The second category of clauses to include in your operating agreement for LLCs that want to be taxed as an S Corporation are clauses related to the requirement of having a single class of stock. As I mentioned earlier, this requirement for a single class of shares is talking about economic rights, and each share must have identical rights to receive a portion of profits and losses from your LLC. There can be no preferential rights, and you can't pay one shareholder first at the expense of another. So there are a couple of things you want to add or change to your operating agreement. First, you want to remove all references to capital accounts or any other requirement that's related to taxation as a partnership. As I mentioned earlier, many of these clauses are inconsistent with being taxed as an S Corporation. Speak with a knowledgeable business attorney or your accountant for help in identifying them, and then make sure to remove each and every single one from your operating agreement. Second, you want to have a clause in your operating agreement that states what ownership interests in your LLC are going to be called and what criteria members must meet to receive them. Usually, the ownerships in an LLC are called units or shares, or something like that. If you call them shares, your operating agreement must state that the company will only issue shares and that each share must be deemed to be of the same class to satisfy the, quote, one class of stock, end quote, requirement of Code Section 1361, and these shares must only be issued to individuals who are eligible to be shareholders of S corporations. We'll talk more about ownership eligibility in a minute. But the point here is that you want to make sure that you specify that your LLC only issues shares to members or owners, and that these shares satisfy the one class of stock rule for S corporation purposes. Third, another clause you want to add to your LLC operating agreement for S corporation purposes is an allocation of profits and losses clause. This provision states that all items of income, gain, loss, deduction, and credit are allocated among the members strictly in proportion to their ownership percentage in the company. Try to reference IRC Section 1366, Subchapter S of the Code, as those are the code sections that specifically govern how S corporation income flows to shareholders. Speak with your accountant or your business attorney to help you draft this provision. Fourth, in addition to, and as a complement to the allocation of profits and losses clause, your LLC operating agreement should also include a distributions clause. The distributions clause will reiterate that each share confers identical economic rights to its shareholders to comply with the one class of stock requirement, and that each shareholder will receive distributions in accordance with the proportion of shares held in the company. The third category of clauses that you want to include in your LLC operating agreement for S corporation purposes are clauses related to potential ownership of your company's shares. As I mentioned earlier, only certain types of individuals can be members of an LLC taxed as an S corporation, such as U.S. citizens, resident aliens, and certain types of trust. Anybody else, such as non-resident aliens, corporations, partnerships, And other LLCs are ineligible and can't be members of an LLC taxed as an S Corporation. You also can only have a maximum of 100 shareholders, which usually is not a big deal for small LLCs. In addition to the capital contribution and ownership interest clause discussed earlier, here are two more clauses that should be included in your LLC operating agreement for your S Corporation ownership purposes. First, you should have a clause in the operating agreement that requires each member to certify that he or she is an eligible S Corporation shareholder whose ownership of the shares in the company will not cause the company to lose its S Corporation status. You can also have them sign a separate certification to the same effect, but it should be referenced in the operating agreement, and each member must swear under the pains and penalties of perjury that it's true. Second, your LLC operating agreement should have a transfer restriction clause that doesn't allow members to transfer their shares to anyone that is an ineligible S Corporation shareholder or would cause the company's S Corporation election to terminate. Any restrictions should be specifically spelled out in your LLC's operating agreement to make it clear that you want S Corporation status preserved in any and all transfer of your LLC shares. Usually, these clauses require at least a supermajority approval by the other members so they get a say in who can be a member of the company. And the requirements to be a supermajority are usually something like 66% or 3/4 of the members who own shares in the company. As a pros tip, make sure the clause states that any transfer in violation of the clause is, quote, void ab initio, end quote. This is Latin for void from the start. This means that if a member transfers the shares in violation of the restriction, the transfer is void and has no legal effect. You should have this clause in the agreement so that it's clear that if anyone transfers the shares in violation of the clause, that the transfer is void and won't have any legal effect, and it will be as if it never occurred in the first place. In conclusion, electing to have your LLC taxed as an S Corporation is often a very smart move. However, in order for it to be successful, you need to make sure that your LLC's operating agreement reflects your new tax status. Otherwise, you run the risk of the IRS voiding your election, which can result in back taxes and penalties. If you're an LLC thinking about becoming an S Corporation or already an S Corporation, you should review your operating agreement today to see how it treats shareholders, taxes, and distributions. If the agreement references capital accounts, it's likely inconsistent with being an S Corporation and should be amended. Speak with your accountant or an eligible business attorney if you have any questions before the IRS starts looking at the issue and voids your S election. I hope you found this information helpful. If you found it helpful, please hit the like button, subscribe to the channel, and share it with another Massachusetts business owner. Thank you so much for watching, and I'll see you in the next episode of Small Business Legal Tips.